How's it going, everyone? This is Nick. I am back here with yet another Reventure Consulting YouTube cast where I bring you deep data on real estate markets across the country so you as home buyers and real estate investors can make better decisions about where to buy and invest. And today I am super excited to talk about San Francisco. This is a market that you guys have been asking me. You've been peppering me with questions on San Francisco, and I'm finally happy to deliver for you. So in today's episode, we're going to take a look at what the deep data has to say about the San Francisco real estate market. I'm sure you guys have seen the headlines over the last year. Lots of talk about a mass exodus out of California, a mass exodus out of San Francisco specifically. And I'm going to be honest, there is some blood in the streets in the San Francisco real estate market, particularly downtown San Francisco. We'll get into that later. We're also going to take a look at San Fran in general and whether now is a good time to buy. Have prices come down enough to make it worthwhile for investors, or are they just simply too expensive? The typical home price in San Francisco is over $1.1 million. That's 6 times the US average. That is so expensive. So we're going to take a look at why that's the case and whether now is the time to get into the real estate market, whether you're a home buyer or real estate investor. So without further ado, let's get into it. So to get started with San Francisco real estate, the first thing we need to talk about is just the absurd prices in and around San Francisco. I mean, there is no other area in the country that is even close to the Bay Area when it comes to home prices and rents. The typical price in the San Fran metro area, which includes San Francisco as well as some outlying counties like Marin, Contra Costa, as well as Alameda, which is in Oakland across the river. The typical home price is $1.2 million. And that's for like the average house. Which in many cases is a condo, $1.2 million. So you're not getting the best of the best for $1.2 million. That's just what the average is, which is absolutely nuts. You go to a city like Austin, the typical price is $400,000. You go to a city like Miami, the typical price is $330,000. Yet it's $1.2 million in San Francisco. Simply put, most people can't afford that, and I think that's why you're seeing a lot of people move out of San Francisco over the last 3 or 4 years. It's really become a city that's created and curated for rich people, and if you're not rich, it's hard to live there. Things weren't always this bad though. So on this graph, we're taking a look at the typical home price in San Francisco, which is the blue line, and we're comparing it to the typical price across America, which is the gray line. So as you can see, in February 2021, San Francisco typical price of about $1.2 million. And then in the US on an average, it's $272,000. So basically the typical price in San Fran is about 5 times higher than the US average. But as you can see, if you go back through time, it wasn't always this much higher. I mean, right now the delta between the US average and San Francisco is about 900 grand. If we go all the way back to 2001, the difference was about 300,000. So back in 2001, the typical price in San Francisco was 449,000. So prices in San Fran have basically tripled over the last 20 years. That is insane growth, whereas they've only doubled in the US, going from 136 to 272. So home prices in San Francisco have appreciated much faster than the US average. Now, one thing you might note is that it's been a bit uneven in San Francisco over time. There was a big run-up in prices through the mid-2000s, peaking in about 2006, and then there was a crash. I mean, San Francisco actually got hit pretty hard in the housing crash from 2007 to 2012. Values declined by about 30%. However, they immediately picked back up and just skyrocketed throughout much of the 2010s, where they are today at 1.2 million. So I know what you guys are wondering. Why is San Francisco so expensive? And does it deserve to be that expensive? Is 1.2 million too high? Is San Francisco in a bubble at 1.2 million? Are we going to see another housing crash in San Francisco like we saw in 2008, 2009, 2010? Can we expect values in San Fran to go down by 20, 30%? Well, to answer that question, you really need to look at why values are high to begin with in San Francisco. And it comes down to 2 principal reasons. The first are income levels. People make a ton of money in the Bay Area. The median household income in the San Francisco metro is $115,000. The US average is about 65. So people in San Francisco make 2 times as much as the US average, and the higher incomes are in the local population, the higher home prices are going to be. And you can see what I'm talking about here on this graph, where we're comparing the top 100 metros or so in the US based on their median household income. This is data from the US Census in 2019. A little dated. We need to wait a couple more months to get 2020. Should be a pretty good representation. And we're comparing it against the typical home price in February 2021. And you can see there's a very strong relationship. So the higher the income in a city, the higher the home price. That's what this kind of positively sloped line means. And you can see that most dots here, most metros have median incomes in that 50 to 75,000 range, right? And they have home prices in the 200 to 300,000 range. But San Francisco is all the way up here, way above everyone else. So typical or median home value of 115,000. That's the second highest in the US, second only to San Jose, which is right next to it. If you guys are enjoying the data presented in this video, please make sure to hit the like button and to comment on the video. I love when you guys interact with the content. And to be honest, I spend a lot of time putting these videos together. I love sharing this data. And when you guys interact with the videos, it helps more people see them. So please like, please comment. And if you haven't subscribed yet, please also do that as well. All right, back to the video. So the Bay Area here has income levels that just nowhere else in the country is coming close. In fact, DC, that's the only other area above 100,000. No other area is even above 94,000 after that. That's Boston. San Francisco is 115. So it makes sense that home prices in San Fran are high. But astute observers will take a look at this graph and they'll say, hey, Nick, wait a minute, this line kind of predicts what the home price should be based on the income level. So if we were to draw a line up from 115 here and then go over here, we would see that based on 115 income, San Francisco should have a price of 850, but it actually has a price of 1.2. That's why the dot is above the line. So home prices in San Francisco are higher than you would expect, even given the 115,000 household income. Prices are just higher than you would expect, even given that. So why is that the case? Why, even accounting for the fact that San Francisco has 115,000 income, why are prices all the way at 1.2 million so far above this line? And this is where the fundamental supply and demand of real estate really comes into play. And I like to talk about this a lot. Real estate is all about supply and demand. Demand you can think of as income and jobs. How much money are people making in the local economy? We know a lot in San Francisco. But more importantly, how many jobs are being added into the local economy each year? We compare that to how many new homes and apartments are getting built. If you add a lot of jobs and don't add many homes and apartments, that's going to put upward pressure on real estate because there's going to be a housing shortage. There's going to be all these new people and all these new employees in the city, and they're going to be competing to try to find apartments and homes. That's going to bid prices up. And this is a real problem for San Francisco. In some sense, it's a good sign that the economy is adding a lot of jobs, but it's a really bad sign that the area is failing to permit and build new homes and apartments. And when you do that, you end up in a situation like this. So what this graph is showing is the jobs to permit ratio. What we're doing is we're taking the amount of jobs added in San Francisco from 2016 to 2020, and we're dividing it by the amount of permits that were pulled in San Francisco from 2016 to 2021. Short note, I didn't count job growth through 2021 because of the effects of the COVID pandemic. It's unclear just how many jobs that were lost in San Francisco are going to come back. So to avoid that kind of confusion, we're just looking at job growth prior to the pandemic. And the one thing you can see is that San Francisco is all the way at the top of this list. So between 2016 and 2020, San Francisco added 211,000 jobs to the local economy. It permitted 72,000 new housing units. That's a 2.9 jobs to permit ratio. So that means for every new home, for every new apartment that was permitted, San Francisco added 3 jobs. You can really see in those terms how San Francisco has a housing shortage. There's 3 new workers competing over every 1 new housing unit that gets built. That's how you end up with huge, huge appreciation. And it's this fundamental housing shortage that's going to keep prices elevated in California for a long time. Basically, California has a huge housing shortage all across the state, especially in San Francisco, and they are utterly failing to deliver new homes and apartments. There's a lot of different reasons for that. Obviously, geography is one. It's a very dense area. There's not a lot of land to build. However, the city's burdensome regulatory environment is another reason. I talk to a lot of developers all across the country, and a lot of them say, I will never go and build anything in San Francisco because it's going to take me 3 years to get a building permit. I'm going to have to fight the zoning and planning board. It's going to be a complete nightmare. And maybe 5 to 6 years later, I'll have my project up. A lot of developers are saying, I don't even care. I know the appreciation's high, but I don't want to deal with it. And as a result, San Francisco is failing to build enough new housing for its population. So until San Francisco and California in general solves their housing inventory issues and solves their permitting issues, prices are probably going to stay elevated. Now, there is one big downside risk factor in San Francisco that no one is talking about that could send the housing market into a deep crash. And I'm going to tell you guys about that issue right now. And it's San Francisco's reliance on tech. A lot of people, myself included, think San Francisco might be in a tech bubble, meaning that there's tons and tons of money getting thrown in, tons and tons of new companies just starting up left and right, raising money from venture capitalists who don't really have business models that are engineered for long-term success. And they might raise a 20 million Series A, they might be a little more mature, raise a 150 million Series D round, and use that money to employ all these people for their company, but yet they make no money, flat revenue growth, no profitability, and those companies could go extinct and could go bankrupt eventually and result in huge issues for San Francisco. You can get a sense of the potential instability caused by the tech bubble on this graph, which looks at the amount of venture capital startup funding in San Francisco over the previous 12 months, going back 2 decades. And, you can see that basically, it's kind of humming along, raising $10 billion a year in San Francisco, 09, 10, 11, then bam, shoots up in 2014, 2015, goes up by 3 or 4x, kind of stagnates, and then boom, goes up again in 2018, 2019, all the way today, where in the last 12 months, San Francisco startups have raised $62 billion from venture capital funds. How much is $62 billion? That's about 15% of the Bay Area GDP is in these venture capital startups raising money. 15% in the local area GDP. I included some context here. Cities like LA and Austin, you can see that they've had increases in VC funding. It just hasn't been nearly as stark. 61 billion here in San Fran, that's 6 times what it was in early 2014, 7 years ago. When you see that type of growth, you should get skeptical. You should get very skeptical because there could be a looming tech bust. If this number were to go down, like it did in the late 90s, early 2000s, there could be huge problems in San Francisco's economy. Now, of course, San Francisco is a big place, right? We have downtown San Francisco, we have Oakland, we have Berkeley, we have Silicon Valley. There's all these different neighborhoods, and they're all actually reacting very differently to the current situation, all the outward migration. Some real estate markets in San Fran are doing really well, others are doing really poorly. So it's important to establish some local context in terms of, how much are prices in different areas? How much are they going up or down? And that's what we're going to do right now. So what we're looking at on this map are all the different zip codes in the San Francisco metro area, and the color coding means this. The greener the zip code looks, the higher the home values. The bluer the zip code looks, the lower the home values. And there's really 4 big pockets of really expensive areas in the San Francisco metro. So if we go actually north of the Golden Gate Bridge, we have the Golden Gate Bridge right here. We go up into Marin County. That's where we see some really high values. Typical price in 94941 of 1.7 million. Typical price in 94904 of 2 million. Huge prices, very expensive in Marin County, north of San Francisco. Now, if we go down, zoom more in on the downtown San Francisco area, we also have high prices. 1.9 million in 94114, 2.1 million in 94118. Just really high prices in the downtown San Francisco area. If we scroll down, go to basically the border of Silicon Valley, we have Palo Alto, Menlo Park, 2.5 million, 6.5 million, 1.7 million, 2.4 million in Redwood City. So huge, very expensive homes in kind of this north-south spine going from Marin County to San Francisco all the way to San Mateo County near Silicon Valley. There's also some high prices east of Berkeley in Alameda County. So 94708, 1.7 million, 94563, 2.4 million. There's high prices there as well. These areas in blue are the more affordable areas. You could see Richmond, Concord, Antioch, maybe some southeast areas of Oakland. These are more affordable. Now I say affordable in quotes because you could see here, for instance, in Richmond, 94806, typical price of 547,000. Like that would be very expensive for any other city for a certain zip code. It's not. It's cheap in San Francisco. So the areas in blue is where you'll find more affordability if you're looking to buy a home or buy an investment property in San Fran. Now, the elephant in the room that we need to address is what's occurred since COVID happened. I'm sure you guys have seen the news about this, but lots and lots of talk about a mass exodus out of San Francisco and huge issues in the local real estate economy. Lots and lots of homes being put on the market, high inventory, price reductions left and right. And to some degree, that is happening in certain areas. There are certain areas of San Francisco that are seeing double-digit price declines year over year, even when the rest of the country is seeing just massive appreciation. The U.S. average home price has gone up by 8 or 9% in the last year. In certain areas in San Francisco, it's gone down by 10%. So now we are back to the zip code map, but instead of looking at home prices, now we're looking at the home price appreciation over the last year from February 2020 to February 2021. And in this case, green means high appreciation, blue means low appreciation, actually a value loss. So the first thing that sticks out is downtown San Francisco is really hemorrhaging prices. Lots of blue here. So for instance, 94123 in the Marina District, typical values have gone down by 10% year over year. Investors here have lost a significant amount of money. 94114 minus 8%. 94103 minus 9%. Basically, this whole downtown San Francisco area is covered in blue. And when people are talking about the exodus of San Francisco and the huge issues the real estate market's having, they're really talking about this downtown area. But if you zoom out, you can actually see there's green covering most of the metro. Actually really high appreciation if we go into Contra Costa County, plus 13%, plus 13%, plus 13%, plus 14%. We go back to Marin County, plus 12, plus 13. So what I suspect is happening actually is not so much a mass exodus out of San Francisco in general, but it seems like I think a lot of the people that were living maybe a more urban lifestyle in downtown San Francisco decided to leave to go to some of these more suburban counties in green. Now, I think everywhere in San Francisco is exposed to the downside I talked about with tech. All the growth in tech that's occurred over the last decade, all the startups, all the IPOs, yeah, that's ridden the wave of prices higher everywhere. But if that bubble were to burst, if all of a sudden, VCs stop funding, all of a sudden a lot of some of their startups go bankrupt and there's a shift in the market, I could see San Francisco in general getting hurt. Whether you're in downtown San Francisco or whether you're in Contra Costa County, I could see there being issues everywhere. And so I would say right now, San Francisco, I expect there's still probably another leg down. However, once that leg down passes, I think in the long run, it's a good market because all those supply constrictions, they're not even close to permitting enough new homes and apartments over the long run. I think if values reset by 10 or 20%, go down by 10 or 20% from here, it actually might be a good buy given all of the supply constraints in the housing shortage in the market. If you are looking to buy in the San Francisco Bay Area, whether it be a home or investment property, and you want more data and information to help you with that decision-making process, please reach out to me. Go to www.reventureconsulting.com, submit a contact form. There's actually a link in the description. Submit a contact form, leave a brief description about what you're doing in real estate, and I'll be sure to get back to you. Also, please support me here on YouTube. I spend a lot of time on these videos. I love sharing this data with you guys. Please make sure to like the video. That's really important. So, if a video is liked, it'll get shown to more people. Also, comment. I want to hear your feedback, particularly in this case, if you live in the Bay Area. I want to hear what you think. All right, that's it for today. This is Nick from Reventure Consulting signing off.